This is ET Markets Cryptologue, brought to you by CoinSwitch Kuber.
Hi, I'm Sidhartha Shukla, and welcome to the Cryptologue with ET Markets. Here, in every edition, we are going to discuss the most relevant issues in the crypto ecosystem. For this edition, we are looking at how crypto has evolved as an asset class over the years and how can one navigate this new space. Bitcoin, the world's first cryptocurrency, itself is a difficult idea to wrap your head around. But in little over a decade, more than 10,000 crypto tokens have been launched. A new asset class has been born, and it can be difficult to keep pace with such a rapidly evolving place. Also, the crypto community is working hard to address some flaws around the technology, mainly around the challenges it faces with scalability, and the solutions that have come up till now do look promising. To discuss more about this, we are joined by Ashish Singhal, founder and CEO of CoinSwitch Kuber, which is one of India's largest crypto asset exchange. Hello, Ashish, and thank you for joining us today. We saw a dramatic price rise and fall in crypto assets back in 2017 and 18. What's different this time around?
So that cryptos are in an adoption phase, right? And these cycles will continue to happen. These cycles are the representation of adoption and then correction, right? Whenever the adoption curve goes high, the prices follows, right? This time also it's no different, right? It went in when the prices are high, it may fall down as well. So we have seen already 3 crypto cycles, each one bigger than the other, right? And these are just a representation of how the adoption of cryptocurrencies and blockchain are growing. More and more people are getting added to the crypto ecosystem, where this reflects in the difference in the demand and supply, which ultimately reflects back in the price of our cryptocurrencies. You would see a lot of companies, Coinbase going IPO, PayPal, Square adopting cryptocurrencies, and overall a general positive sense around the world has helped boost this bull run. And every time the cycle starts and ends, it ends up creating more and more people, adding more and more people to the crypto ecosystem, right? So these cycles will continue to live on, would become smaller over time, but would become more influential over time as well, because every cycle brings new set of education, new set of users, new set of adoption, and new set of progress from the government standpoint as well into the crypto ecosystem.
Right. Interesting point, Ashish. Like you're saying that more adoption, especially from institutional investors like public companies like Square and Tesla, bringing Bitcoin on their balance sheet has helped with the bull run as well. But what we saw last time, that there was a very sharp price crash as well. Bitcoin went from levels of $20,000 to $3,000, right? Do you think we have a different set of sophisticated investors or hodlers this time, and which might lead to less volatility in the space as well?
I wouldn't say that to start with. I still believe that these cycles has its own pros and cons, right? A cycle when the market is going up is fueled by the new demand. New demand gets excited, has a FOMO in mind when comes to buying and selling crypto, and which results in the sharp increase in the prices, right? And there has to be a correction to that prices, because that does not reflect what industry is actually is at the moment, right? So this price correction may happen in the future as well. As per this bull run, there might be a bear market as well as we go along. How deep would that be? How deep would the corrections be? Only time will tell, right? And as we are seeing more and more adoption, we are seeing that these cycles will get stabilized. There won't be so highs of highs, and there won't be so lows of lows as well as we go on. Only time will tell how this cycle would evolve into, but we expect a bit of correction as we go on.
So there will be some bit of a correction.
Yeah.
All right. So the market may be a bit frothy at the moment.
Because there is a sudden influx of users, there's sudden influx of too many participants, be it PayPal, Stripe, Tesla. It's just a culmination of all that, which is resulting into this bull market. We don't know how long it will last, but there has to be a place where the actual demand and supply needs to come back to what the actual adoption of crypto and blockchain is about, right? So there has to be a bit of correction that may happen in the future.
So the price will eventually meet with the fundamentals as well.
Yes.
Download CoinSwitch Kuber now and join 10 million Indians on India's largest crypto trading platform.
Ashish, this space of digital assets began with Bitcoin, which is a cryptocurrency, a new money product, but the ecosystem has evolved well beyond into a new asset class. There are now more than 10,000 crypto tokens available. So, what are some of the categories in which different tokens fall under, and how can one navigate such a broad space?
Sure. Amazing question, Siddharth. And I treat cryptocurrencies like a startup. How, in a word of startup, you can categorize them as a fintech, as e-commerce, as utilities, as experiences. This is similarly how you can categorize the problems that people are trying to solve in crypto in these categories itself, right? Some people are trying to revolutionize the way lending, micro lending has worked, and trying to create that use case on blockchain, which becomes equal for all, right? No matter where you are in the world, you have equal accessibility to the liquid funds and be able to participate in this economy, right? There are people who are trying to solve, through NFTs or through fungible tokens, trying to showcase authority or ownership of asset class into the ecosystem, right? So there are multiple cases that are being trying to solve across the cryptocurrency industry, and that is why you see so many tokens coming out. And these categories exactly replicate the real world scenarios, the real world use cases that they're trying to solve. Somebody is trying to build a gifting platform on crypto. Somebody is trying to build an e-commerce platform on crypto. Somebody is trying to build a data collection and protection engine. Somebody is trying to build an AWS, which is Ethereum, is trying to build an AWS of crypto, right? So I think categorizing in few of these categories may not be possible, but it's a wide range of categories which the real world use cases are for cryptocurrencies, which people are trying to solve these use cases, and every use case has multiple teams behind solving these problems. That is why you would see multiple tokens trying to solve the same use case in the real world.
All right. So all these crypto tokens are mimicking the real world onto the virtual. That's why you have Bitcoin, a money for the virtual world as well. You have tokens like Mana or Decentraland, where tokens can be used as a utility token to buy a certain real estate on that platform itself, right? And then there are other security tokens as well, which you had mentioned. So yeah, that makes sense. Now, how does still like one navigate this space, because a lot of the new participants are in it to make money as well, right? And you have still a very broad asset class at the moment.
Yeah.
So what would be some tips and tricks you would suggest to new investors, users, to navigate such a crowded space?
Sure. I think a couple of things that our users can do themselves is first do your research, right? How do you invest in stock? You go look what the company does, who the promoters are, who the investors are, what the kind of product they're delivering to the market, what kind of future growth that market holds, where the demand and supply lies today, and where it can reach, right? Similarly, when you are thinking of investing in any cryptocurrencies, you have to do the exact same thing. You have to go back, look who the team is, who their backers are, where they are in their journey, what are the things that they have solved in the past, how does that experience applies to solving this use case, where they are in their adoption journey, and how does the future outlook look for them, right? So these fundamentals still remain the same. The other thing that a user has to do is also make sure that they are using trusted platforms to invest in these cryptocurrencies. A lot of platforms out there list any token without any standards or user protection in mind. Making sure that you choose the right platforms where the opportunities that you get are curated as well at a first level by the company itself, making sure that you're only getting access to the tokens which are already vetted as a step one by the company itself.
Sure. All right. Also, what's your view on the digital asset investor base. How has it evolved over the last decade?
Sure. Digital assets obviously existed only for 12 years now, and it has grown tremendously since then. So today, India holds about 15 to 20 million crypto investors in India, and CoinSwitch Kuber already has 9.5 million registered users, which tells you the appetite of the Indian users, right? In just 14 months, we are able to get to about 10 million user base. So this demand is growing exponentially day by day, right? And since it's a global phenomena, a lot of global changes are driving the adoption in cryptocurrencies in India, right? Be it Elon Musk tweeting about Dodge, or be it PayPal, trying to give access to 3 million, its 300 million user base, trying to get access to Bitcoin, right? So these bigger platforms who are engaging retail users, not just creating a market in globally, but also influencing Indians to start to look at this new industry, try to see what problems it is solving, how it is solving it, and whether it is worth their investment. It is a risky investment, but a lot of Indian investors are putting a part of their portfolio now into cryptocurrencies, managing their portfolio a little better. It's a risky investment, but could be rewarding as well. So, based on their risk and reward ratio, different Indians are trying different segments of the India population is trying to put a bit of money into cryptocurrencies, looking how this industry has evolved in the last 10 years and what what it looks up to in the future, and what it can it be the internet 3.0, what it sets out to be.
Sure. Interesting points, Ashish. Can you share some insights which you may have observed on CoinSwitch Kuber as well? Some metrics around the monthly active users, the monthly transacting users, things like that.
Sure. So today we have over 5 million monthly active users onto our platform. In terms of MTUs, we have beaten even Zerodha, which is one of the biggest fintech player in India today. We have about 1.5 to 2 million monthly trading users at this point, right? To give you a little more insight into the kind of a user base, when we started CoinSwitch Kuber, we assumed that only the tier A population who knows about crypto would be investing in cryptocurrencies. But today, 60% of our user base come from tier 2 and tier 3 cities. Places like Balia, Meerut is investing into cryptocurrencies. We have over 2,000 cities investing into cryptocurrencies through CoinSwitch Kuber itself. So we are not just building for the tier A population in India. We are building for the entire India, and entire India is investing into cryptocurrencies.
Sure. That's really interesting. Um, Also, this is an important question because both Bitcoin and Ethereum have been criticized for not being able to scale, but the communities are working to improve upon this law. Can you help us understand these scaling solutions and how they will help? Because at the end of the day, they are network technologies. And
Yeah.
if network technologies don't scale, they are sort of useless, right? Yeah.
Yes. So amazing question, Siddharth, again. And obviously, every technology is built to solve a problem, right? It goes through an adoption curve. It goes through an evolution where the problems that it's solving now it starts to solve at scale. So blockchain and crypto technology is at that pace itself, right? Ethereum could only handle 12 transactions per second at the time that it started. Now with Ethereum 2.0, we are expecting a much higher scale. We are figuring out solutions like Lightning Network, side chains, which basically create their own side blockchains, solving your specific use case and then merging and doing only a single transaction to actually reduce the load on the main blockchain, and actually solving the use cases on creating different side chains which are solving your blockchain use cases. So don't think of it like a single blockchain trying to scale to a million transactions a second, but maybe 100,000 side chains trying to solve to about 10 to 100 transactions a second, right? So these are some innovative solutions, be it sharding, be it horizontal scaling of the Ethereum network that are coming in, which would evolve. So we have proven that the use case is solvable now. The Byzantine general problem is solvable, and now it is time to scale that up, applying different solutions. So different companies, even many tokens are trying to solve this problem in their own way. We don't know who would be the end winner, but if the smartest minds around the world are working on solving this problem will get solved as the crypto market, as the blockchain market evolves in the next few years.
So to summarize, off-chain solutions do look promising at the moment, and they can be built on top of the main blockchain network of either Ethereum or even Bitcoin, where instead of each individual transaction happening every time, they might club a multitude of transactions together and settle them at a given specific time, right? I think that's
Absolutely.
the basic idea. Sure.
Yes.
All right. Makes sense. And now, coming to regulations, there was a report by the Economic Times today, which, quoting sources, said that the government is likely to regulate cryptocurrencies as an asset and will also categorize tokens as per the technology they use. What's your reaction to this development and approach towards regulating the space?
No, I think this is a very, very positive steps in the right direction. The first problem that we were facing with cryptocurrencies is the categorization itself, right? How should it be categorized? Should it be as an asset? Should it be a currency? And obviously, as an industry, we agree that it is an asset class. Bitcoin started as a currency, but that no longer is the use case that most of the crypto or the blockchain industry is evolving in, right? Day in, day out, people are trying to solve new use cases, be it lending, insurance, borrowing onto blockchain, which would have real world use cases. So these has to be treated like an asset class where people can invest in and believe in these use cases for their future, for their money to grow, right? So I think this is a very, very good step by the government. Obviously, there is a long way to go from from categorization to regulation, but this is a very amazing first step in the right direction.
Sure. And Ashish, the tax season is upon us as well. And I think you guys must be getting a lot of queries from your users on how to file taxes for their trades in crypto. So can you shed some light on how should one go about it? Or are there any tools or something which can also help Indian users to understand how much tax they are supposed to pay?
So crypto, since it's not classified, we recommend people to either consult their CAs on how to file these taxes. What we recommend to the user is based on your tax bracket, you should start paying gains on the year that in the financial year, whatever gain you had, you should start paying taxes directly on that. How you would pay on any other asset that you own, sold, or bought during that year, and to get to the real fundamentals of what percentage of tax to be paid, in what category to pay it for, you should definitely consult your CA to get a better understanding on were you doing day trading, were you investing in selling, were you a long-term investor, were you a short-term investor. So there are multiple use cases where an individual CA would be a better person to answer these questions for any user.
All right, so the taxation will depend on the end use case, whether somebody got it as a form of money for some work they did, or whether they were like short-term traders, or whether they were like long-term investors who booked some gains after a couple of years. Thank you, Ashish, for helping us understand the different kinds of crypto assets and how the community is working on addressing the challenges associated with these network technologies.
That's all for now. Keep listening, ET Markets Cryptologue, brought to you by CoinSwitch Kuber.
Download CoinSwitch Kuber now and join 10 million Indians on India's largest crypto trading platform.